I want to start with the news with Greece. You have half a dozen businesses in Athens. Are they operating?
Well, with difficulty is the answer. I mean, it's really sort of stifled. But it's 0.1% if we exclude associates. And if we include associates as companies we own 20 to 49% of, it's about 0.3 of 1%. So it's not important in the context, but what it is important psychologically. That plus China, I mean, it's interesting, the IMF have just taken down their forecast marginally from 3.5% real growth for the world economy to 3.3, because that's what we've seen. We've seen over the last 6 months of last year and the first 6 months of this year a sort of slight slowing down despite the oil price going down, despite commodity prices going down, and despite Western Europe starting to pick up. And the irony or the paradox is the fast growth markets are slower growth. They're still faster than the mature markets. Where we've been looking for growth, ironically, is in Western Europe. We've seen a turnaround in Spain. We've seen Italy getting a little bit better. France still tough. Germany very strong.
Yeah.
The Ukrainian situation, the crisis in Russia, really masks the strength in the German economy. We're seeing it very strong. And the UK, of course, has been strong. But, you know, there are difficult things. I mean, the UK budget is probably deflationary. Chancellor Osborne is planning his strategy for the next 5 years, as he brilliantly did for the first 5 years of the coalition government. So that's one thing. You've got the Grexit, or the potential Grexit, with a cloud hangover, and then you've got the Brexit, the British possibility as well. So there are sort of elements of uncertainty which I think make clients more cautious, and we've seen that. And we're seeing that actually reflected in the forecast. The IMF is always sort of starts the year high and gets lower. The Business Council is always dead right, actually. The Business Council starts low and maintains the position.
With all due respect, the IMF forecasts do have a tendency to come down. Just to circle back to Greece, though, are your people showing up to the office? Do you have
Yes, I mean, they're trying as hard. Well, we've been in a position to put in contingency plans. I mean, you know, as you said yourself, you know, you were sitting outside the EC in 2010. So we've had 5 years to plan this.
Yeah.
No, and from a liquidity point of view and everything else, we're in a reasonable position. But it's very difficult for our people and very difficult for them to operate in these circumstances. And as you know, the banks have been closed again until Monday. So I think you're going to Greece tonight.
With a lot of cash.
You'll see it firsthand. I think it's very, very difficult. Because the Greek economy, whilst this has been going on, has gone down even further and caused more problems. And I think the Greek Prime Minister, is in a really difficult position. I mean, it's 6 of one and half a dozen of the other, in the sense that whichever way he goes, he either breaks his party if he reaches an agreement, or he breaks his country if they have to go through a Grexit from the euro. So it's really a tough call. Very tough call.
It certainly is, and Sunday does appear to be the sort of the climax of this. I did think
it was quite interesting. The front page of the New York Times dredged up that photo from 1953 when the Germans
got debt relief.
Yes, debt relief. So somebody has to remind them of that. We've been talking about that in the UK for the last month or so, and it's funny that the New York Times suddenly came out with it with a black and white photograph from the signing in 53.
Oh yeah.
So there are lessons.
Although
from
I believe
history.
the relief that the Germans got in the 50s was only about a 10% haircut.
Well, okay, at least it was a haircut.
Okay, and it was the first one, not the third one. Anyway, Asia.
Yeah.
Big correction, the equity markets over there. Have you noticed yes, in China, important to distinguish, in China, have you noticed a deterioration in the business environment in China?
Well, it's the stock market sort of follows in our experience, follows real stuff. And I saw an item on CNBC. I was out in Asia. I think I was in China at the time, in Shanghai, and there was a piece on CNBC about the farmers.
Why are we talking about a piece on CNBC?
No, it was a piece on CNBC about the farmers. The farmers investing, and this woman being an expert in the commune on investment. It reminded me of the pancake flippers and the taxi drivers. I'm trying to get balance into the world's media. I can mention Fox and Maria Bartiromo as well.
Fair enough. We're all friends.
But what it was an interesting lesson. I mean, it was an interesting signal that there was an extreme amount of speculation in the Chinese market. Now, we've seen valuations in China in terms of acquisitions hit high points, particularly in the tech area, and we've sort of resisted that. We've seen multinational companies actually come under pressure in China, more so actually than local companies. There's a bit of a differentiation. And we've seen extreme volatility in the Chinese market. Our Chinese business was very strong in Q1, not so strong in Q2. It's our third largest market. It's $1.6 billion of revenue against the US, which is 6.5, and the UK about 3.3.
And your forecast for Q3?
And our forecast for the year will probably be up about 4 4.5% like for like, excluding currency acquisitions. What's interesting is I talk to people who really know what's going on in China, or claim they do, and if you look at power statistics, that's usage of power, they're up about 2%. And these people double it to calculate GDP growth. So they think the Chinese economy is growing at about 4.5%,
wow,
which mirrors what we see, as opposed to the official rate of about 7.5. So we'll see.
4.5%.
We're unabashed Chinese bulls.
Yep.
If somebody asked me this morning, one of the ad journals, what we, whether we changed our view on China, the answer is not. If we got the opportunity to double up, we would double up.
All right.
But we're pinning our flag. And be careful what you wish for, because worldwide growth, that IMF forecast,
yes,
the two big drivers are the G2, US and China. That's the big delta in our industry.
Yeah. Just very quickly, one last question. We are here at Sun Valley, where everybody's talking about deal-making in media and telecom.
You're talking about deal-making.
Everybody in there.
We're just having a good jaw-jaw.
What are the consequences of that for your industry? Do you lose leverage against a combined Verizon and AOL?
Well, Verizon and AOL is a new model. I mean, I think we're all trying to figure out what that means for us and what the heart of it was. But basically what's happening, you've got tepid GDP growth. You've got little or no pricing power, a focus on cost. That means consolidation amongst clients, consolidation amongst media owners, either of the old variety or the legacy variety or the new, and consolidation amongst our industry. There are 6 big players in our industry. I doubt in 6 years' time whether there'll be more than 4. And it's a sign of the times. So actually it's interesting. The IMF forecast just reinforces what we see going on, tepid growth, no pricing power,
and we've brought it full circle perfectly.